This is a newsroom check of what's happening in the markets right now and what we have been discussing behind the scenes and figuring out what the real cause is. All right, let me just open with this question. Do you think that there are two key culprits for the carnage we're seeing, not just in India but across the world? One, the governor of the Bank of Japan, and the second is Jerome Powell, the Fed governor. Let's
Okay.
start with this. One, increased rates more than expected, and one has taken too long for any action. All right.
I thought for today's thing, Tamanna will say that there are two culprits, BOJ governor and BOJ governor.
No, also
I know.
Powell. Also Powell. That's the other side of the story,
Yeah,
right?
but I was just the personal view, of course, but just the immediacy of the fall in the last 2 or 3 days. It has to be the move that happened on Thursday at BOJ's end, and the fact that the yen carry trade.
Coming already, right?
Yeah, but the yen carry trade under. So typically in markets, right, Sajid, until it happens, until there's a tipping point, until it's known.
This is the second time the BOJ raised rates.
Yeah, but just the way the currency is moved or the yen has
people were
moved.
sleeping.
I
They
reckon.
didn't think that BOJ will go for a sleep for another 17 years. They thought, right? But that's not fair. The governor is taking a call on his economy.
Yeah, no, I'm not debating whether there is right or wrong. All
Yeah.
I'm saying is, to my mind, I think one of the key reasons for this immediate global market carnage that we're seeing and our market cut. I'm using the terms carnage and cut very specifically.
So look at
Has
the
to be BOJ.
timeline. Bank of Japan
Yeah.
raises rates on Wednesday morning,
Yeah.
but everyone starts getting a cold and a shiver from Thursday, I would say,
Yeah.
Friday.
It's okay for those who have just tuned in and want to know what's happened. On Thursday afternoon, when Bank of Japan, after their markets closed, hiked the interest rate. That was historic. For a very, very long time, Japanese rates have been almost negative. For the first time, they went into positive. Why did it affect the global markets? It's simply because people have been borrowing cheaper Japanese currency and buying assets in the US, especially all the mega tech stocks. Now they shot through the roof, and when this happened, the currency play also came into factor. These two together killed what is known as the N carry trade, which we will explain later. N carry trade is
No, you just explained it beautifully.
Yeah. So the N carry trade, I borrow in N and I invest in a currency which is more attractive in multiple assets. Once the rates reverse, then I have to repay in simple terms. Therefore, I had to sell all the tech stocks, the mega tech stocks. Now that triggered the first fall. The next fall happened as soon as trillions of dollars started shifting. Now that is the biggest thing. So from Nikkei, Japan, it went to US. From US again, it came to Asian markets this morning. All the Asian markets were down. India is also down very sharply. Now European markets are down. We will know at 8 p.m. when the US markets open whether this is a contagion or not.
But the futures are down 5.5% as we speak.
So therefore, this is a global contagion of a mini contagion nature.
No,
Where this is-
so between the Bank of Japan decision and what's happened on Monday and Friday markets, just one thing which was nail in the coffin. I just want to add that, which was your non-farm payroll data for July.
Exactly.
It was painful. Your non-farm payroll jobs basically grew at 118,000 in July versus 159,000 in June, and much lesser than expected. Your unemployment rate is the highest in 30 months at 4.2%. So which is why I'm saying Bank of Japan and the Fed. Now the fear is that Jerome Powell saying rate cuts for September are on the table. Did he take too long? Did he push his country into a possible recession? People are not hiring. What happened?
Countries don't go into recession just because the job data came down, right? It has to be a consistent way for next at least 2 to 3 quarters before a country goes into a recession.
Recession fears are back.
It's okay. I mean, the point is that it's just 1 month's data. Now, next month it may go up. Then again, what will happen? That the higher for longer will come.
In fact, remember, Jerome Powell had to rubbish the June data,
June
which was
data.
very strong, saying
Simple.
that, that's a one-off and we'll still cut the rates. So
September rate cut. it will have to see the data till September before it happens.
But
no,
guys,
correct.
I wonder
Correct,
if
correct.
the Fed does an emergency meeting
I don't think
and
there
does
is-
a rate
I
cut.
don't think the conditions are that severe.
You are
like
right.
Like a Lehman
Like it
crisis,
happened, or
like Lehman
COVID.
crisis, or a
Yeah,
COVID,
no,
where
they-
you
they-
need to do an emergency meet.
If anyone has to have an emergency meeting, is the Bank of Japan, and wondering whether they should they should change
not
things.
No,
worried.
they are not worried. See, they went by their data, they went by their strategy. But the thing is, why would Fed or somebody not come as a preventive measure? See,
Why
you
should it
also-
come as a preventive
no,
measure?
because you did not. You see, you have not.
You are aware
have
of the
to learn-
fact that you are borrowing at
No,
zero
the-
cost,
no, no, no.
and you are investing in asset for return.
No, no,
And when
Sajid,
the tide is changing, in
I'll,
April,
I'll tell you I'll tell you the small change though where I agree with Tamanna a little bit out here is that no the reason I say is on one count is that Japan took 30 years to get back to the levels that it was back in 1989. It's taken less than 3 days for that rally to completely unravel is also impacting Japanese exports, by the way, because of the yen strengthening. And which is why I'm saying what Tamanna says that if somebody needs to have an emergency meeting, it's BOJ. I'm not saying they will.
Yeah.
No one knows.
No
But
one
is there
knows.
a
I
case
have
for
a-
some
I have a data point.
assuaging
No,
the
I have
nerves?
a data point. I have a data point to share. You know, the Japanese loan outstanding, global banks across the world had borrowed 52% more in Japanese yen denominated currencies since 2021.
Okay.
The outstanding is somewhere around 2.7 billion dollars and roughly 750 billion dollars. This is according to research notes. Now there is a huge outstanding that has to move markets, move across assets. Now how whether the emergency meeting will happen or not is secondary. You know, they will have to wait. But this is what will lay in their minds. They have to be prepared out in 2008 and 9. You have to have some strategies in place to prevent a larger
so it will
contagion.
move from a
But-
risk-free,
Yeah.
adjusted return to risk-adjusted
I-
return.
I
Simple
Yeah,
as that.
guys,
You allow the markets to-
yeah, but let's this get too confusing. So I just want to simplify it for our viewers. The simple point is, I don't think at this point of time, any one person has a complete handle on how things will unravel and the resultant impact thereof. So the buy the Indian market on a dip theory that has worked so beautifully for the last 4 years now comes seriously to test.
Yeah.
And maybe it might not be a good idea to just keep in mind that, oh, we are buying every dip, so this is a dip to be bought into. Because this correction, unlike the election day corrective move or the budget day move, is different because it is led by global factors and not by local factors.
And also fundamentals, right? Means the economic fundamentals now determining how the flow will come into India.
I would actually argue, Neeraj, before you take queries coming in, I would actually argue the reverse. If the election result was actually very negative, it would have a larger impact on Indian economic fundamentals.
But it wasn't. So it got bought into.
Yeah.
The extent of this
No,
impact is not
I'm saying
known.
global factors relative to all in India. It's the situation's change. You have a lot of domestic money coming in. The Indian economy is not looking shaky.
Yeah.
The question right now is the US shaky. Sajid is saying let's wait for more data. Today, Goldman Sachs has increased its possibility of a recession. Whatever, that will play out. Fundamentally, has anything massively changed in India over the last 1 year?
But when the
Or
global
last
markets
1 week?
correct the way they, if they correct the way they
Your
would,
inflows, your inflows will come
Same
in.
part here, inflows part of it. How is the Japanese flow coming into India? Let's look at it. Either it's coming through investors from Singapore and Hong Kong who are borrowing from the Japanese bank and investing into Indian markets, or it is coming directly to India. Or the third one is that how some of the Indian companies are borrowing in low-cost Japanese.
okay, you have
loans.
30 seconds by the way because we need to answer queries. Yes.
The low-cost loans, and in all three cases, it's going to become expensive, and so there will be some kind of carry trade impact which is going to be there. The bigger impact will be for Indian infra companies because they've been borrowing, and many of the big mega infra projects have been.
Our
funded
bullet train is one to
from
keep
bullet
them
train
back.
to Delhi Metro to everything.
Yeah.
It's been funded there, and there is going to be an impact on infra spending going forward.
Sure. Okay.
Which is there.
Point well taken. Because there are a lot of questions, we'll move to those questions now. But so the first question that is coming is, should we hold, buy or sell now? I repeat, I don't know what my colleagues think, but I don't think too many people or anybody currently has an idea of whether this is a bottom or no. because the nature of the correction is slightly different than the previous ones, then you might want to maybe just sit this out, because there's no point in being a braveheart and trying to time the bottom. You can buy 2% higher or a 5% higher. At least there is a change of trend. So I would suspect that that might be a better strategy, as opposed to trying to think that because all dips have been bought into in the past, this is also a dip that you should necessarily buy into. Sit on cash. Cash might become very, very precious in the days to come.
I fully agree with Neeraj. See, this is not a typical buy on dips market, because buy on dips market works beautifully when everything is calm and normal after the indices have gone up. In this case, it's a shocker. In this case, it's a shocker. So this has come as a, what I should say, shock and awe. But because we don't know where it stops, as Neeraj rightly points out, we need to wait it out. Keep your incremental cash. Don't even sell out. I mean, selling out is also not an advisable strategy in this case.
Yeah,
You
exactly.
you just need to
It's
sit
a
out.
hold. So it's
Just hold,
basically a hold.
stay back, keep cash. We don't know where this is going to end. Depends on how the markets will play.
I think those who have their sips going out as regular, I mean, at the end of it, I don't know, this comes up as a theme. Sip wale sabse मतलब smart निकलते हैं because because you're hedged.
Because I'm not bothered about the money. There is a fund manager who is going to be, has to manage it. So let him take the headache. Why should I take the headache? Simple as that.
Okay, will there be a repeat of 2008? Is this a global financial crisis? I would say as of now, we don't know enough, but what we can see very, very initially, not really, because look at what started the global financial crisis was a huge real estate bubble, building up, bad loans being sold and resold. Very simply put, people have learned. People have learned.
Culminated into freezing of the credit market because of the Lehman crisis, which happened. But that's not the case here, because
There was
now
a lot of rubbish, and I would say, a very
there is much
shady
more
kind of
risk management now
credit
as
management.
compared
Yeah.
to-
So central bankers have become smart. It is cleaner. The fact is, 12 months ago, everyone was talking about a US recession, yes or no? Everyone was talking about a US recession. A lot of people were proven wrong. People stuck their neck out and said there's going to be a US recession. I'm just saying there was a precedent for that narrative to change fairly quickly.
Yeah, I want to add to this point. We don't know whether it's going to be 2008 or not. We have to look at it in the current context. Look at it from India specifically. Where have valuations gone? In the newsroom, I have been discussing with Sajid the kind of stocks with 2,000 crore market cap, 1,000 crore market. They all become 4 digits, 5 digits. They've been rising, and their P's are 60, 70, 80. Forget about what's happening in the US. Focus on what's happening in the Indian markets. Focus on the kind of run-up that has been built up, the euphoria. Whether the regulators can do it or not, at least the Japanese end has come and punctured the bubble.
So which are the sectors which will be impacted, right? That's a big question that everyone should be asking.
Yeah.
You have the infra, you have railways, you have the capex-driven sectors which are there, because ultimately the funding is coming somewhere from the Japanese bank into the system and then getting funded into the into the capex. If you are doing an overseas borrowing, or if you are getting grants in India or whatever it is. So those are the sectors which will see some kind of pause, I think, before assessment can be done what is the exact impact. And then you have those currency exposures to which many companies have, and all those things will come into play.
It's bringing to mind what Mihir told us this morning, that at the end of the day, sectors or companies which are insulated, two things he said, sectors or companies which are insulated from what's happening globally and have robust cash flows will be safer.
Okay, so a lot of questions, guys. Now we're going to make it a bit of a rapid fire so that we can address more questions. The first question is, and by the way, viewers, please consult your financial advisor before you This is our opinion on what we hear from experts who look at financial markets day in, day out. So, good time to buy fundamentally strong stocks or wait. I would suspect that there might be better opportunities, because this is realistically speaking, this is the first day of the fall for Indian markets. Friday was a small scare. Today is the first fall. These things don't normally change unless the central banks change a bit. So even good stocks or high quality stocks, which are expensive, might come down a bit. So if you want to play tactically, maybe wait for a bit. I don't know if any of you differ from
No,
that.
absolutely. I fully agree with this, because your strategy now has to be, let's assume that even if you're buying mutual funds, even if you're investing through, let's say, you want to buy large cap stocks through large cap funds, you should not deploy at one go. Maybe 2%, 3% of your surplus. Keep averaging. Use this. This is an excellent opportunity to average on the downside and not go at buy at one go, because as Neeraj rightly points out, I don't know what's going to come tomorrow. It's not about earnings. It's about large billions of dollars moving across different markets.
Exactly.
So that it doesn't matter whether we have 20,000 crore as SIP funds coming in or people sitting on cash and stuff like that, because when there is this huge wave that comes in selling, it'll hit. So wait, measured steps would be advisable.
Yeah, very likely.
I think another question which is coming in is, should I be holding IT and power? Should I continue to hold that? I think that's the question which he is asking, and I think IT is still fundamentally a little weak, but we have seen a big run up in IT which is there, and we have seeing a sell off happening in IT in the US because of the kind of money which is flowed into IT stocks. So yes, there will be some kind of pain in IT.
If there is a recession in the US, Indian IT companies are going to be hit very, very hard.
Very badly. But the point is that we haven't seen that kind of impact coming into the Indian companies as yet, except for some economic impact which is there. Power is something which is relatively okay, except for some of the power financing companies which have taken some exposure to Japanese debt, and that may make them little expensive for
Yeah,
them.
but non-Japan as well. The valuations, maybe some of the power companies might be expensive.
Yeah, but the thermal companies have of late gone up, right? Means the theme has been renewable and new energy, which is there, which is getting anyways funded by non-Japanese.
Okay, by the way, just before we do anything else, and I know more questions, but the Japanese finance minister is saying that they are watching the stocks fall with very strong interest, and it is important for the government to judge the situation calmly. So, well, there is some statements coming out
I
from
want to go
BOJ.
back to the point about Bank of Japan. That was the Japanese minister. We forget that central bankers, as revered they are when we see financial coverage, they are not sadhus who've come from the mountains with some gyan. They are appointed by elected governments at the end of the day. So they have a responsibility they have a boss like everyone else. They have some answerability like everyone else. So to assume कि it's पत्थर की लकीर, तो मैंने बोल दिया तो बोल दिया. I'm saying there is enough precedent. I'm not saying they'll roll back what have they've done, but don't be surprised if there are calming voices. No. What am I saying? I'm not saying that, but calming voices, reassurances. It's not like they come from another planet. They're part of the same policy ecosystem.
How flows are going to do is to track the currency, how it's going to move, and that's the best way to look at it.
Sure.
Because ultimately, the currency markets are going to lead the.
Okay, now we got to wrap up very quickly. Any other question?
Has bubble of US IT stocks burst?
I want to start with this.
Yes.
I want to start with this. Has the bubble of US IT stocks burst? I found this very interesting. And in US IT stocks, I'm going to include Nvidia because that was the master of all. Exciting business, only one in the world, and huge moat for what they do. But has the run-up been justified? I mean, you look at some of the mega cap results which are coming out. Amazon, everyone is worried that the amount they spend on AI, is it really meaning anything? Apple, okay, good numbers in the face of it, but China sales down 8% year on year, their biggest market. I mean, how many iPhones are you going to sell on EMI in India? Beyond a point. I mean, in the sense, there is a lot of disappointment. I would think Meta maybe relatively was okay. But remember, IT stocks were running up because the idea was that if nothing else, at least IT is going to be fine. So I think for a bit, there is a reality check.
Yeah, the question was always on the valuation, maybe not necessarily the business model per se, and the valuations were stretched, as Tamanna said. So some bit of a correction happening
Alphabet
there.
also, their cloud revenues were less than what was
And
expected.
remember in Apple, Warren Buffett has slashed his stake by 50% as well. So in some things, some stocks, there is some clear gravity.
He's not the Oracle of Omaha for nothing.
Yes.
Before this, he removed half of his entire stake in Apple.
So quite something. But okay, I hope this helps. We'll try and do this on days when the markets have had a very big move. We'll try and do this again in order to try and connect with our viewer base and try and help them out based on what we are listening from across guests. And do come in and tune into the channel because we've got a battery of guests coming up later on in the day, as well as a power pack day tomorrow as well. So try and tune in for that.